Okay, welcome back. So in this topic today, I would like to talk about financial statement in the accounting that the company use to summarize their accounting data. No worries, it will be easy peasy. Therefore, you can lay your bag down and pick up for yourself a drink, okay? So let's make accounting easy again. Okay, before we are jump into each kind of financial statement, first we will be encountered with a question. What are financial statements? So in my perspective, financial statements are official documents that helps people understanding what is happening in a company financially, generally, and especially by recording the company's economic event for a specific day or a period of time. Next, we are moving on to 4 financial statements, which are the income statement, the owner's equity statement, the balance sheet, and the statement of cash flow. Okay, so without further ado, we're gonna dive into the income statement concept. So in my opinion, the income statement is the public document that show you up total profits and losses of a company that just based on the company's revenue and expense for a specific period of time. And of course, when the revenue is more than the expense, we are going to get the net income, or vice versa, we are going to get the net loss. It is quite obvious, isn't it? And again, if you want this explanation that is more academic, you can refer to the stuff in the slide, okay? Alright, now we are looking in here. That is a real life picturing image of an income statement. So I'm gonna spell it out from top to the bottom, okay? First, we got the company's name, that is IHA company. Secondly, document's name is income statement and the specific period of time, that is August 13th, 2020. Finally, the income statement's layout got the company's revenue were firstly recorded following by the company's expense. Therefore, 2 cases could happen. First, the revenue is more than the expense, we will get the net income as in the slide, or vice versa, we will get the net loss. Furthermore, we ignore how much the company's owner was investing and how much the company's owner was withdrawing. So that is all you need to know about the income statement basically. Okay, now we're gonna dive into the new financial statement. It is the owner's equity statement, or I personally named it is the upgraded income statement. And the question is why, you may ask. Because it reports changes of owner's equity in a company after a specific period of time, and you are gonna be implicit in the next line. Okay, now we are going to analyze a real-life owner equity statement. Firstly, the heading of the owner's equity statement is being as the heading of the income statement. Moreover, we have that the first line, so the beginning of the owner's equity amount, which equal 1,000 for the ended August 30, 2020. So the 1,000 means the owner's equity has remained since ended July 30, 2020. The next lines are the owner's investment, net income, and the owner's drawings. So these 3 factors, including the beginning owner's capital, indicate how the owner's equity has increased or decreased during August 30, 2020. Moreover, as you are seeing, the IHA company reported the net income, therefore it was recorded into the add category. However, if the IHA company reported the net loss, it would be recorded into the less category. Finally, we got the ending owner's equity is 23,500. As you already knew about from my previous video, the accounting equation is the formula assets equal liability plus owner equities, which is the most popular and famous of accounting. So today, I'm going to reveal another fun fact about accounting, that is the balance sheet, which is a religious symbol of accounting because the balance sheet shows the assets, liabilities, and owner's equity of a company at a specific date. And I want to address the word as a specific date, not a period of time, okay? And here we are. This is a construction of a balance sheet. By the way, there is an special difference between the balance sheets and other financial statement that I was mentioning before, that is the other financial statement are all for a period of time. However, the balance sheet is just for a specific date. Therefore, you could see in the balance sheet in the slide was recorded on August 30, 2020 only, and it means before or after that date, the statistic of balance sheets will be varied. Well, now we are looking at assets, liabilities, and owner's equity. We distribute economic event statistic into each category equally, or you can call this technique under the name balancing the balance sheet. Finally, the financial statement that I wanted to share with you guys, it is the statement of cash flows. So this one is quite hard for accounting starter to pick up. However, I will try my best to interpret, okay? For instance, you are being at the Shark Tank show and you are trying to co-investment for the company. After you give away the company's income statement, owner's equity statement, and the balance sheet to prove the company has competencies to thrive in the future, the shark agree investing in your company, except you must explain to them how your company has been using the money and what kinds of area that your company was spending for in the past. So this is the signal that you hand over to them the statement of cash flows, because it summarizes information about cash inflow and outflow of a company for a specific period of time. If you don't get it, so don't worry, we will refer to the visual aid of the statement of cash flow in the next slide right away. Alright, so this is the structure of the statement of cash flows. You can see the heading that is quite alike with the income statement and the owner's equity statement. Moreover, the below part, we can notice that there are three categories. It is operating activity, investing activity, and financing activities, where the company's economic events will be classified and recorded. However, I will explain the concept of those three categories and how to distinguish them in another video, because in this video I just want to focus on the financial statements concept and when it will be used basically, so stay tuned. Alright, so to calculate the cash at the end of the periods, that we need to adhere to this formula, that is the remaining cash equal the sum of operating activities, investing activities, financing activity, and cash at the beginning of the periods. As a result, it shows us the increasing and decreasing of cash during this period of time, as well as the company's operating activities generating enough cash to fund its investing and financing activities or not. And that is all. Okay, so this is not done yet, and I think it is the right time to talk about relationship of four financial statements that we have been talking so far. Okay, so now we can see in the slide, we're gonna start at the first relationship, that is the net income is indeed to calculate the endings owner's equity of the owner's equity statement. The second relationship is that endings owner's equity is needed in preparing the balance sheet. The third relationship is that the amount of cash category is equally with the cash at the end of the periods in the statement of cash flows. In fact, the relationship of financial statements are extremely vital in both real life and studying, because it not only helps you checking on the financial statement but also boost your analysis in accounting situation. So this is a practical problem. There are three questions. It's like piece of cake. So try this out first and compare it with my answer, okay? That is key for the question 1. That is key for the question 2. That is key for the question 3. Okay, so to sum up everything that we have been discussing, firstly, the definition of financial statement and four kinds of financial statement, which is the income statement, owner's equity statement, balance sheet, and the statement of cash flows. Finally, there are three relationships of four financial statements, that you need to remember. So this is the end for this video, and the next video will be about accounts, debits and credits in accounting. So tell me if you like it and sub if you love it, and see you in the next video. Peace.